Hello traders, Gary Wagner here, just about 9:30 in Honolulu, 2:30 in New York. It is Wednesday, the third day of December 2014, and this is the daily report for gold and silver. Mixed bag in the precious metals market, specifically silver down a little bit. Gold showing a really strong move today, trading up a little bit over $10 on the day, 1208.61. That's our current print on the screen. Now, when we take a look at the low, 1198.90, the high, 1216.40. Most importantly, the fact that it's trading above where we consider current resistance to be. This is a strong showing in a thin market. Silver, however, we are seeing a different story. That is trading off about 6 cents on the day. You can see we've got current print at 1638, the low 1622, the high 1668. Most importantly, just as we see gold trading over current resistance, meaning it could become support, we do have silver trading right at resistance. That's at 23% retracement level at 1651. More on silver in a little bit. And for those that are interested in the loyalty program, at the end of this show, for those that want more information, I will have a little 2-minute segment that will show you how to sign up. More on silver in a little bit. First, the fact that we are trading above, and if we close above, really signals some real strength for the bulls here, because the way that I see it is that we've had this level of resistance. You can see that right here on our short-term chart. We've talked about this level, roughly 1207. It is a 38% retracement. It's a retracement from 1254 down to 1130 right in here. And if in fact we're able to close above that particular point, that signals some strength, and that would really signal a strategy of beginning to accumulate and purchase gold rather than selling gold, as we have been really focused on in the past. Now, one of the interesting things that I'm noticing is this strength, this rise right now is really a $16 rise, not a $10 or $11 rise as we're looking at right now. Because when we look at the Kitco Gold Index, and what that does is it really takes into account strength or weakness of the dollar. Right now, we've got a strengthening dollar. We'll pull that chart up in a second. We've also got an equities market that's running higher today, but you've got a negative $4.40 coming into the market and $16 of buying coming into gold, giving it a net change right now of about $11, $11.60. And so that to me is significant. The same thing with silver. Silver would actually be up about 2 cents if it wasn't for the fact that you've got a negative 6 cents in terms of the dollar conversion weighing it down. So all in all, we do have thin markets, and that's what we need to be careful of. But when we take a serious look at this market, there can be no question, there can be no doubt. We've got a series of, or a higher low, but we really need to see a higher high. Now, in terms of the higher high, the real high we've got to take out is 1254. Of course, we would probably enter much before that. If we see some kind of strength right in this area, in other words, a close above this, then over the next couple of days prior to the weekend, we'll probably look to initiate some sort of a long position. Now, here's the key, and this is the conflicting data that we're getting. And the first thing we obviously need to look at is the dollar index. And so when we go ahead and do that, you can see that this, as we talked about yesterday, we had just come above this particular point right in here. These were our former tops in the market right in here at around 88.50. We took that out yesterday, and then look at it today. We're up at 89 right now, 89.01. That's really the first time it's traded at or above 89 since this rally, which began back in July of this year. So we've had 6 months of pretty much straight higher pricing in the dollar index. And so now when we take a look at the equities markets, this is a daily chart. This is the E-mini 500. Let's go ahead and blow that up a little bit. You can see we're not at the record top. Record top is just a little bit shy, or our current price, I should say, is just a little bit shy of this record top. Let's try to put this in as straight as possible and kind of carry it over. But as you can see, we're just a touch shy of that. But for the last 2 days, we've had sharply higher pricing yesterday and moderately higher pricing today. Of course, we still have an hour and a half to go in trading. But as I said, if we see this market close above 1207 in gold, that really to me bodes a potential run, a bullish run in the market. And there's a couple of things that we want to take into consideration, both short-term and long-term. First of all, let's look at our short-term resistance. And so to do that, what I've done is I've gone ahead and pulled up a 720-minute chart. It has a couple of different areas. On this particular one, 1255, 1131, but we're reversing it so that we have 23 down here and 76. Our real resistance level, in the way that I see it right now in terms of resistance, you can see where this particular price point, I'm talking about 1225, was supportive for this being a half a day chart. Then it breaks down, it creates this low, and that's from this high here, and this low is where we actually create our Fibonacci retracement. We have identified 1207. We also have another support level at 1193. You can see that right here, especially since the market came down, and on 1, 2, really 3 days, we tested these lows, but these lows held, and then the market really took off from there. I believe that our next real resistance level right now is approximately 1225 with support at 1193. We'll see if it closes above former resistance, which would then become support at 1208. That's the short-term view. But there's another thing that we want to take a look at, and that's the historical seasonal tendencies in gold. And to do that, we really need a longer-term chart. So to illustrate the point of seasonal tendencies in gold, I've put up this 2-week chart. So we're looking at a lot of time, and as you can see, I've roughly placed an arrow at the beginning of each year, the beginning of 2009, beginning of 2010, 11, 12, 13, and 14. And when we take a look at how purchasing gold in January at each of these points would have worked, we can see the following. So that in 2009, especially, I mean, as the market was going up, it's no big deal. You could almost buy anywhere, but you can see 2009, we had the market really have a nice little rally. You can see this little bottom that we had in 2010, that would have been an effective trade, buying at the beginning of the year. 2011, and we did buy it at the beginning of most of these years anyways, but you can really see in 2011 it hit this bottom. Even in 2012, look, the beginning of the year it hits a low and then takes it up. The only place you would have gotten absolutely slaughtered or just basically stopped out was in the year of 2013, but then that's the year that we saw the market decline, 38% or 30%, and even last year, or excuse me, the beginning of this year, you would have had a pretty good purchase right in here if you had bought. So traditionally, I look for some sort of a bottom roughly at the beginning of January, after they've washed out all the lows and we've completed whatever sell-off we had going into the end of the year. You had a sell-off going into the end of the year here, a sell-off going into the end of the year here, sell-off going into the end of the year, this year completely down, and of course, if we take a look here, a sell-off going towards the end of the year. Now, we've also had this sell-off going towards the end of the year. The question is, will this year provide us with an early incentive, meaning to enter from the long side at some point in December rather than January? That's the big question. But traders, when you look at this market historically over the last, say, 5 years, every year, 1, 2, 3, 4, 5, every year out of the 5 years, so 4 out of 5 years, you made money by purchasing gold in January. So that's what I've been looking at. Traditionally, we bottom picked around January and gotten some kind of a good trade out of it. Is it coming a little bit early this year? That's the big question. So traders, what about silver right now? Now, if we adjust this for this new low rather than the low that I placed it on. This was the prior low, and this was at one crazy day where we had that range. So if we take that out, for example, and keep this where it is, we can see that in silver at least there's a real resistance area, call it 1650. It is trading below there. If it can break above that point, I believe the next resistance level is about $1 higher at 1750. So if we can get some closes above 1650, I would look for this market to genuinely track to about 1750 on the day. This has been Gary Wagner wishing you, as always, good trading. Talk to you tomorrow for another daily update and review. For those that are interested in the loyalty program, here is how you would enroll. First off, I want to thank all of our subscribers for the loyalty that you have shown us over this last year. Starting last year, I started a program called the Loyalty Program. Now, the Loyalty Program, that I am going to repeat it, is only available for 1 month from now until January 1st, and it will allow you to get our best pricing ever at a maximum of about $83 a month. Now, all of you who are viewing this video are actually eligible for this particular service. And the way that you would enroll, from the top, you've got these options. Go ahead and press My Account. And then once you're at your account, press Add Renew Subscriptions. And as long as you're an active member, and by viewing this video you're going to get a couple of new choices. The first choice allows you an annual membership, $999 per year. It comes out to about $83 per month. It is billed annually. You would click that, and we have added a new one for those existing loyalty members, or for those who choose to. You can now get a lifetime membership, $29.99, $29.99, and this will allow you to have an account really that never expires. Now, with the Loyalty Member Gold, of course, you're grandfathered in. Your fee will never change. It will never go up. And to enroll in this, simply click on the option that you choose. And then once you do that, click Next. When you click Next, you'll get a screen similar to this, which will allow you, without a PayPal account, to simply use your credit card and go in and enroll for the loyalty program. We will be sending out a special notification, but prior to doing that, I wanted those who watch our daily video the opportunity to get this first. Again, this option will only be available till January 1st. For those of you who have been with me for a while and are looking to stay, this is really the best, most cost-effective way to get the gold forecast every day. As I said, at minimum, it runs $83 per month. And of course, the lifetime, it's going to be much less as the years go on. Again, thank you for your support.